Hello everyone and welcome back to our YouTube channel. We're excited to have you here. In today's video, we're going to explore one of the most important topics for anyone building a software business, and that is SaaS Pricing Models Explained. Whether you're an entrepreneur, startup founder, software developer, marketer, investor, or simply curious about how modern software companies generate billions of dollars in recurring revenue, this video will help you understand the strategies behind SaaS pricing in a simple and practical way. So sit back, relax, and let's dive into today's video. Imagine building an incredible software product that solves a real business problem. Your application works perfectly, customers love using it, and people keep signing up every day. But despite having an excellent product, your business still struggles to make consistent profits. Surprisingly, this situation happens to many startups around the world. The reason is not poor software quality or lack of customers. Instead, the problem often lies in pricing. Pricing is one of the most powerful business decisions a SaaS company will ever make because it determines revenue, customer growth, profitability, market positioning, and long-term sustainability. Even small adjustments in pricing can dramatically increase recurring revenue without requiring thousands of new customers. Software as a service has fundamentally changed the way software is sold. Traditional software companies relied on one-time purchases where customers paid once and owned the software forever. That model created unpredictable income because companies constantly needed new customers to survive. SaaS transformed this approach by introducing subscription-based pricing, allowing customers to pay monthly or annually while receiving continuous updates, cloud access, customer support, new features, and security improvements. This recurring revenue model creates financial stability for businesses while ensuring customers always use the latest version of the software. One of the biggest reasons SaaS companies attract investors is because of predictable recurring income. Instead of wondering how much revenue will arrive next month, subscription businesses can forecast future earnings with much greater accuracy. Investors value predictable cash flow because it reduces uncertainty and demonstrates business stability. This is why companies like Microsoft, Adobe, Salesforce, Shopify, Zoom, HubSpot, and many other software businesses transitioned towards subscription models over the past decade. However, not every SaaS company charges customers in the same way. Different businesses solve different problems, serve different markets, and create different types of value. Because of this, pricing strategies vary significantly depending on customer behavior, industry requirements, product complexity, and business objectives. Selecting the right pricing model is not about copying successful competitors. It is about aligning pricing with customer value. One of the simplest and most common approaches is the flat rate pricing model. Under this strategy, every customer pays exactly the same subscription fee regardless of company size or usage. The biggest advantage of flat rate pricing is simplicity. Customers immediately understand the cost without comparing multiple plans or confusing feature lists. For startups launching their first software product, this approach reduces purchasing friction and simplifies marketing. However, the downside is that businesses may lose revenue from larger customers willing to pay significantly more while simultaneously discouraging smaller businesses that only require basic functionality. To solve this challenge, many SaaS companies adopt tiered pricing. Instead of offering one subscription plan, they create multiple packages designed for different customer segments. A basic plan serves beginners or freelancers, a professional plan targets growing businesses, while an enterprise plan provides advanced functionality for large organizations. Each tier unlocks additional features, storage, automation, integrations, security, reporting capabilities, or customer support. Tiered pricing allows businesses to serve a broader audience while encouraging customers to upgrade as their needs evolve. This strategy not only increases average revenue per customer, but also creates a natural growth path that scales alongside customer success. Another increasingly popular model is usage-based pricing, sometimes referred to as pay-as-you-go pricing. Instead of charging fixed monthly subscriptions, businesses charge customers based on actual consumption. Cloud computing platforms, messaging services, payment gateways, AI platforms, and API providers frequently use this model. Customers appreciate paying only for what they use because it reduces financial risk during the early stages of adoption. Meanwhile, SaaS providers benefit because successful customers naturally generate higher revenue as their businesses expand. This creates strong alignment between customer growth and company growth. Per-user pricing represents another widely adopted strategy, particularly among collaboration software and productivity platforms. Businesses pay according to the number of employees using the software. As organizations hire more people, subscription costs increase automatically. This pricing model is easy to understand, scales naturally with company size, and produces predictable recurring revenue. However, some organizations attempt to reduce costs by sharing accounts or limiting employee access, which may reduce overall product adoption. Some companies instead charge based on features rather than user count. Feature-based pricing encourages customers to upgrade whenever they require advanced capabilities. Basic plans may include essential tools, while premium subscriptions unlock automation, analytics, artificial intelligence, advanced reporting, security features, integrations, or unlimited storage. This approach allows smaller businesses to enter the platform affordably while enabling experienced customers to pay for enhanced productivity and business value. Freemium pricing has become one of the most recognized customer acquisition strategies in modern software. Under this model, businesses provide a permanently free version with limited functionality while reserving premium capabilities for paying subscribers. Millions of users can experience the product without financial commitment, creating enormous brand awareness and reducing barriers to entry. Successful freemium businesses carefully balance free functionality with premium value. The free version must provide enough usefulness to attract users, while encouraging upgrades as customer needs become more sophisticated. Free trial pricing follows a slightly different philosophy. Rather than offering a permanent free plan, businesses allow customers to experience premium functionality for a limited period, often ranging from 7 to 30 days. During this trial, companies focus heavily on onboarding, customer education, feature adoption, and demonstrating measurable business outcomes. When customers clearly experience value before the trial expires, subscription conversion rates improve dramatically. Effective onboarding often determines whether a free trial becomes a paying customer. Enterprise pricing introduces an entirely different level of complexity. Large corporations rarely purchase software using standardized public pricing because their requirements vary considerably. Enterprise customers often require custom integrations, dedicated account managers, enhanced cybersecurity, compliance certifications, employee training, service-level agreements, and personalized implementation support. Instead of displaying fixed prices, many SaaS companies encourage enterprise prospects to contact the sales team for customized quotations based on organizational requirements. Psychology plays a surprisingly important role in pricing decisions. Customers do not always evaluate software purely through logical calculations. Perceived value, comparison effects, anchoring, trust, social proof, and presentation influence purchasing behavior significantly. Businesses often position premium plans beside standard plans to make mid-tier subscriptions appear more attractive. Annual billing discounts encourage longer commitments while improving cash flow. Even seemingly minor pricing adjustments can substantially impact conversion rates. Value-based pricing represents one of the most sophisticated approaches available. Instead of calculating subscription costs based on development expenses or competitor pricing, companies estimate the financial value customers receive. If software helps a business save thousands of dollars every month, increases productivity significantly, generates additional sales, or reduces operational costs, customers often accept much higher subscription fees because the return on investment remains obvious. Under value-based pricing, software becomes an investment rather than an expense. Many new founders make the mistake of competing primarily on price. They assume lower prices automatically attract more customers. While inexpensive software may increase short-term adoption, extremely low pricing often creates sustainability problems. Lower revenue limits, product development, customer support, marketing investment, cybersecurity improvements, infrastructure upgrades, and innovation. Furthermore, customers frequently associate extremely cheap products with lower quality. Successful SaaS businesses compete through value, reliability, customer experience, and measurable business outcomes rather than price alone. Artificial intelligence has also begun influencing SaaS pricing models. AI-powered platforms frequently charge according to processing volume, AI-generated outputs, automation tasks, API requests, or computational resources consumed. As businesses increasingly integrate generative AI into software products, pricing strategies continue evolving to reflect resource-intensive AI services while remaining accessible for smaller organizations. Pricing optimization is never a one-time activity. Successful SaaS companies continuously analyze customer behavior, conversion rates, churn, feature adoption, upgrade patterns, support requests, and competitive positioning. Small experiments with pricing pages, billing cycles, feature bundles, discounts, onboarding experiences, and promotional offers provide valuable insights that help maximize long-term revenue. Data-driven pricing decisions consistently outperform assumptions because real customer behavior often differs from expectations. Customer retention remains equally important because acquiring new customers is significantly more expensive than retaining existing ones. Subscription businesses benefit enormously when satisfied customers continue renewing month after month or year after year. This is why successful SaaS companies invest heavily in customer success teams, educational resources, responsive support, regular product updates, feature enhancements, and continuous innovation. Long-term customer relationships create predictable recurring revenue while increasing customer lifetime value. Another important financial metric closely connected with pricing is monthly recurring revenue, commonly known as MRR. This measurement represents predictable monthly subscription income and serves as one of the most closely monitored indicators within SaaS businesses. Closely related is annual recurring revenue, or ARR, which estimates yearly subscription income. Investors, founders, and executives use these metrics to evaluate business growth, financial stability, and future potential. Higher retention combined with effective pricing strategies often leads directly to stronger MRR and ARR growth. Customer lifetime value, often called LTV, measures the total revenue expected from a customer throughout the entire relationship with the business. Customer acquisition cost, commonly known as CAC, measures the amount spent to acquire each new customer. Sustainable SaaS businesses strive to maximize lifetime value while minimizing acquisition costs. Effective pricing plays a direct role in improving this relationship because higher subscription revenue increases profitability without proportionally increasing marketing expenses. Global markets have also influenced SaaS pricing strategies. Many businesses now offer regional pricing based on purchasing power, local currencies, taxation requirements, and economic conditions. This approach improves accessibility while expanding international customer bases. Flexible payment options including monthly subscriptions, annual discounts, team packages, and enterprise contracts allow businesses to accommodate organizations of every size. As technology continues evolving, SaaS pricing models will become increasingly intelligent through artificial intelligence, predictive analytics, customer segmentation, and personalized recommendations. Future platforms may dynamically recommend subscription plans based on customer usage patterns, automatically suggest upgrades when additional value becomes available, and optimize pricing through machine learning without requiring manual adjustments. Businesses that embrace intelligent pricing strategies will remain more competitive in rapidly changing digital markets. Ultimately, pricing is far more than selecting a number on a subscription page. It represents the intersection of customer psychology, perceived value, financial sustainability, competitive positioning, product strategy, and long-term business growth. The most successful SaaS companies understand that customers are not simply purchasing software. They are investing in productivity, efficiency, automation, growth, and business transformation. When pricing accurately reflects the value delivered, customers remain satisfied while businesses generate predictable recurring revenue capable of funding continuous innovation for years to come. Whether you are planning to launch your own software startup, improving an existing SaaS product, investing in technology businesses, or simply expanding your understanding of modern business models, learning how SaaS pricing works provides valuable insight into one of the fastest growing industries in the world. Behind every successful subscription business lies a carefully designed pricing strategy that balances customer value with sustainable profitability. Companies that master this balance are the ones most likely to achieve long-term growth, customer loyalty, and lasting success in the digital economy. And with that, we've reached the end of today's video. I hope you found this information valuable and learned something that can help you in your entrepreneurial journey. If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and turn on the notification bell so you never miss our upcoming videos. We'd also love to hear your thoughts, questions, or experiences in the comments below. Thank you so much for watching and for being part of our growing community. Take care, stay motivated, keep learning, and we'll see you in the next video. Goodbye.